It was a good year for stocks, but not a good year for any traders that were long oil. Oil having one of its worst years in years, down about 20%. American oil output is at a record high. Inventory globally, they're up. But there's also many big macro issues to focus on with oil, whether it's Russia or Venezuela, now even some developments in Nigeria. Let's talk about it all. More about the commodity, these risks, and more. CNBC contributor, RBC Capital Markets Global Head of Commodity Strategy, and somebody who took a break from a vacation to join us.
No.
Halima, yes. And we do appreciate it, Halima. Thank you very much. Are you able to, you do these global macro better than anybody, are you able to rank sort of the risks that the oil markets are facing next year?
I mean, the question is, Brian, are we going to be seriously oversupplied? What caught a lot of market participants by surprise this year was the OPEC decision to phase in barrels right after Tariff Liberation Day. I mean, they announced that they would be quickly bringing back, over 2 million barrels of production. We probably got half of that because it was mainly Saudi barrels, but that came against the backdrop, as you just mentioned, of very high U.S. production, continued high production out of Guyana, Brazil. So we had plenty of oil this year. And the big geopolitical stories that we would think about as disrupting oil supplies, like the Iran-Israel U.S. 12-day war, really didn't lose any barrels on that. So the question is it the same story next year in terms of being awash in oil? Or is something going to happen seriously with Venezuela, Russia, watch the second story on Iran? But again, right now, everyone's saying we look like we have plenty of oil for next year.
Well, you brought up kind of the hidden. I think that if I was going to say what's the hidden story of oil for 2025, I would say Brazil, because Brazil is now over 4 million barrels a day. I'm not going to say they came out of nowhere, but Petrobras has done a lot. Guyana, to your point, ExxonMobil and Chevron and Hess, they have come up considerably. Let's focus, though, quickly in that region on Venezuela. We know what's been happening with the oil tankers. If there were military action or Maduro leaves, would we view that as bullish or bearish for oil, or maybe some combination of both on the time frame?
I mean, we've talked about this before, Brian. I think a lot of market participants will quickly start penciling in a massive increase in Venezuelan output. Like when I covered Venezuela a couple of decades ago in the U.S. government, they were producing over 3 million barrels. They're now under 1 million barrels of production. But this is going to be a long way back for Venezuela. It's going to require about $10 billion a year in investment and a stable security environment. And there really is a near-term risk on the already reduced supplies. We have reports that PDVSA is already having to shut in production because of these attacks on tankers and this de facto embargo declared by the United States. So the question is, do we have a chaotic transition in Venezuela that puts current output levels at risk? I would also say pay close attention to Russia, because I think part of the softness in prices we've seen recently is this anticipation that Trump is going to get a deal that brings back more Russian volumes, removal of sanctions. But again, the Russians have basically said that they are considering a deal, but they never sign at the dotted line. And so do we really believe that this is going to be the year where Vladimir Putin makes significant territorial concessions when it comes to Ukraine? Not clear at all.
Helima, I'm not sure if you know this, but Taylor Sheridan is a big Fast Money fan. And if he doesn't cast you in season 3 of Landman, he's making a huge mistake. Of course you do. You should be on it. Maybe Brian Sullivan should be on it.
I was going to say, why you throw him? I'm happy to just wave in the background.
Well, but Halima, I mean, come on.
I know. Thanks.
But my question to you is the following. First of all, I think oil is going higher next year. But what is the price on the downside that really puts our domestic producers in a bit of a bind?
Well, they would say current prices are suboptimal. But the question is, if you really if we're holding in the low 50s for WTI, that is not a price that works for producers. The question is, how many have hedged? Can they do this for a year? I mean, they talk about it being a tough price environment currently, but also some of the tariffs on aluminum and steel have not been great. There are labor issues in the sector. They've managed to keep production elevated this year, but can it continue at current levels if we don't have a more robust price environment? And I do think you're already starting to see, when you talk about OPEC, the other side of the production equation, the fact that OPEC has paused production increases, I think is important. Like, they're not signaling for 2026 that they're going to be putting a lot more supply in the market because, frankly, they don't have a lot of supplies left. I mean, there is not a lot of oil in the OPEC tank, so they just can't repeat what they did in 2025.